Between April and December 2024, foreign governments sold $400 billion in U.S. Treasury bonds, the largest sustained selling in American history outside a financial crisis. And almost nobody noticed. This isn't about Russia losing money. Russia lost $300 billion in frozen assets. But the real damage is to the United States. Because when you weaponize the safe asset, you destroy the thing that made American power possible. The ability to borrow unlimited amounts at low interest rates because the world trusted U.S. debt above everything else. That trust is breaking right now. And once institutional trust breaks, it doesn't come back. This is Cycle Mindset Vault, where we break down financial history to understand how markets actually work by studying how they fail. Each video uncovers the repeating patterns behind economic booms, debt cycles, and power shifts, so you can see what's happening beneath the headlines. If you find this breakdown useful, like the video, subscribe to the channel, and share your thoughts or questions in the comments. April 10th, 2024. Brussels, Belgium. The finance ministers of the G7 nations meet behind closed doors. On the agenda, what to do with Russia's frozen reserves. Since February 2022, the West has held $300 billion in Russian central bank assets. Frozen, not seized. The money sits in accounts at Euroclear in Belgium, at the New York Fed, at the Bank of England. Russia can't access it, but the West hasn't taken it either. For 2 years, this frozen wealth has been leverage. Give up Ukraine, get your money back. But by April 2024, the war is in its 3rd year. Ukraine is running out of money. Congress is gridlocked on more aid. Something has to give. In that conference room, a decision is made. The G7 will seize the interest. The $300 billion generates approximately $3 billion per year in interest. That interest will be transferred to Ukraine. The announcement comes April 30th, 2024. Headlines celebrate it as justice. Russia's frozen assets will rebuild Ukraine. But in central bank headquarters across the world, in Beijing, Riyadh, New Delhi, Abu Dhabi, Brasilia, a very different conversation is happening. The ministers are asking their staff the same question. If they can do this to Russia, can they do it to us? The answer is yes. If the West can freeze $300 billion for political reasons and then use those assets to fund a war against the owner, then any country's reserves held in dollars, euros, or pounds are vulnerable. Your sovereign wealth is only sovereign until it isn't. The legal justification was creative. The interest isn't the principle. Russia still technically owns the $300 billion. The West is just taking the profits. But from a central bank perspective, the distinction was meaningless. If you own an asset and someone takes the income it generates, you don't functionally own it. This was the signal. And quietly, without announcements, without press releases, central banks around the world began doing something they hadn't done at this scale in 50 years. They began selling U.S. Treasury bonds. Here's the pattern that repeats through financial history. When you turn the safe asset into a political weapon, you destroy its status as the safe asset. Before February 2022, U.S. Treasury bonds were considered above politics. Yes, the U.S. had frozen assets of enemy nations before. Cuba, Iran after 1979, North Korea, Libya, Venezuela. But these were small countries, rogue states, acknowledged enemies. The implicit rule was clear. If you're a normal country with normal relations, your treasury holdings are safe. Russia wasn't North Korea. Russia was the 11th largest economy. Russia was a major energy exporter. Russia was a permanent UN Security Council member. Russia held $600 billion in total reserves, of which $300 billion was in Western currencies, specifically as insurance against sanctions. Russia had diversified into Western reserves thinking they were safe. They were wrong. Every other central bank took notice. China held $3.4 trillion in foreign exchange reserves, roughly $1.1 trillion in U.S. Treasuries, another $500 billion in other dollar assets, over $1.5 trillion potentially vulnerable if relations with the U.S. deteriorated. Saudi Arabia held $120 billion in treasuries. Taiwan, $240 billion. South Korea, $170 billion. Every country with substantial dollar reserves realized those reserves were hostage to U.S. foreign policy. The reserves weren't safe. They were leverage. But the freeze alone wasn't enough to trigger mass selling. Central banks moved slowly. They hoped the freeze was temporary, tied specifically to the Ukraine war. That hope died April 30th, 2024. The G7 announcement that Russian frozen assets would be used, that the interest would be transferred to Ukraine, crossed a line. This wasn't freezing pending resolution. This was confiscating assets and giving them to Russia's enemy. The pattern: confiscation for political reasons destroys trust in the instrument. Trust takes decades to build. It takes one decision to break. The data is public, released monthly by the U.S. Treasury. Here's what happened after April 2024. April through December 2024, foreign holdings fell by $400 billion in 8 months. China sold $89 billion. Japan sold $95 billion. Saudi Arabia sold $32 billion. Belgium, which holds Middle Eastern money, sold $25 billion. The Cayman Islands, proxy for Chinese institutional money, sold $18 billion. This is the cautious first wave. Central banks don't move all at once. They sell gradually to avoid crashing the market and destroying the value of their remaining holdings. The selling we've seen is just the beginning. When foreign central banks stop buying and start selling, someone else has to buy. There are 4 possible buyers. Domestic institutions like pension funds already hold $6 trillion in treasuries. They can't dramatically increase without dangerous overexposure. Domestic households hold $3 trillion and aren't increasing. Foreign private investors face the same freezing concerns as central banks. That leaves the Federal Reserve. The Fed is supposed to be independent of the Treasury. But when nobody else will buy, the Fed has to step in or yields spike and fiscal crisis follows. In early 2024, the Fed held $5 trillion in treasuries. By December 2024, $5.2 trillion. The Fed is buying again despite claiming it's reducing its balance sheet. The Fed's share of the total Treasury market increased from 20% in early 2024 to 22% by year-end. That's a 10% increase in Fed ownership in 8 months. This is the debt monetization pattern beginning. When the central bank becomes the primary buyer of government debt, the currency's privileged status is ending. The Treasury market is based on trust. For 80 years, the world trusted that U.S. Treasuries were safe regardless of politics. That trust allowed the U.S. to borrow at privileged rates. But trust, once broken, is nearly impossible to restore. Russia's reserves were frozen. The interest was confiscated. Every central bank saw this. They can't unsee it. Central banks know that U.S. law allows the president to freeze foreign assets under the International Emergency Economic Powers Act. The president just has to declare an emergency. Ukraine was an emergency. Taiwan would be an emergency. Anything can be an emergency. So no central bank can trust their reserves are safe. Without trust, they must diversify. The United States gained $300 billion in frozen assets. The United States lost the trust that supported $7.6 trillion in foreign treasury holdings. That's a 26-to-1 loss ratio. The historical parallel is clear. In 1914, Britain weaponized finance by seizing German assets during World War I. Neutral countries saw that Britain would seize assets for political reasons. They diversified away from pounds. By 1944, at Bretton Woods, the dollar formally replaced the pound as reserve currency. Britain's financial dominance lasted 30 years after the weaponization. The U.S. froze Russia's reserves in 2022. The pattern suggests the dollar loses reserve dominance within 15 to 20 years. Not through collapse, but through slow erosion as central banks diversify into gold, other currencies, and commodities. The privilege doesn't end with a bang. It ends with sustained, quiet selling, which is exactly what's happening right now. History doesn't repeat itself exactly, but financial behavior does. If this breakdown helped you see the pattern more clearly, like the video, subscribe to Cycle Mindset Vault, and share your perspective in the comments. Understanding the cycle is how you stay ahead of it.